The biggest rise in consumer sentiment in 13 months has brought the chance of an interest rate rise next month a lot closer. The final piece of the jigsaw will be the June quarter inflation figures to be released in a fortnight. If they're strong, economists believe that the Reserve Bank will be forced to act. Andrew Robertson reports.
How quickly opinion can shift. Earlier this week, some financial market players were contemplating the chance of the next move in interest rates being down. Now the only possibility, it seems, is up.
From the Reserve Bank's point of view, there's not a lot of room to manoeuvre. They've already got underlying inflation seemingly settling at around 3%, and an unemployment rate that's pushing down towards 5%, and a positive medium-term outlook for the economy.
That positive outlook for the economy will be helped by the 11.1 percentage point jump in consumer sentiment in July, almost completely wiping out the losses of the previous 3 months. Driving the result was solid economic data and the first signs of a bounce back on financial markets, but the new Prime Minister also played her part.
There seems to be some relief around the resolution to the proposed resource tax. We'd seen the standoff between the government and the miners in the previous month that weighed on sentiment. That seemed to be part of the bounce back this month as well.
The big question, though, is will the renewed consumer confidence flow through into higher spending?
Our survey has shown that consumers, notwithstanding their positive outlook, are still very cautious in terms of their own finances.
In other words, no. Marilyn Wright is the owner of the Romantic Notions gift shop at Lane Cove on Sydney's affluent North Shore. Her business, like many other retailers, is still feeling the effects of that consumer caution.
You used to be able to, say your quietest day was Monday and you would build up to the weekend, but now it's all over the shop and very difficult to pick. So that makes it difficult for staff arrangements and, and for ordering your stock.
Although Lane Cove is a wealthy area, Marilyn Wright believes many locals are feeling the pain of increased payments on their big mortgages. She also thinks election speculation is keeping people's wallets shut.
You see that every time election comes around, whether it be, your local, your state or your federal. You always find that people's spending leading up to that time is restrained.
While the strength in the consumer sentiment figures is adding to the case for more interest rate rises, some new research from Macquarie Bank has highlighted the delicate balancing act the RBA must perform. According to Macquarie, consumers are walking a tightrope and it won't take much to push them over the edge.
Because so many first-time buyers have come into the market in the last couple of years with very high debt loads, then they are very exposed to any small changes in interest rates at the moment. And so you could see the share of their overall income devoted to mortgage repayments absolutely go through the roof.
Brian Redican says it will only take another 0.5 percentage point rise in the official cash rate for discretionary spending to be significantly wound back, which he says is the Reserve Bank's dilemma.
There's still a chance that the retail banks themselves might raise mortgage rates, notwithstanding what the Reserve Bank does. So again, the risk for the Reserve Bank is that they push rates too far higher, too soon, and that you actually get an unwanted slowing in the economy.
For that reason, Brian Redican thinks the Reserve Bank should not rush to raise rates again in August. He concedes, though, that the inflation figures to be released on July the 28th will be the clincher.